Hi guys, hi all. Can you guys hear me so far? Okay. All right. Hi guys, welcome to the webinars. Okay, let's just wait for everyone to tune in and then I will start the session for today. So basically today, you guys already know it's about ICT Trading Strategy, which is continue from the past one. Okay, if you have any question, you can ask me about these strategies. Okay. And pardon me, today I have a little bit of sore throat. I think along the session, I think I might be coughing as well. Hi guys, good evening from Singapore. Quite some time I did not see you guys, right? How you guys doing so far? Good evening from Sri Lanka. Wow, I never been there. Okay, I think I will start at my time. It's about 5:30. Let's just start at 5:35 p.m. which is my time. So it's about 2 minutes. Okay. Wow, from New Zealand. Nice. Okay. I think some of you guys, I saw that the name should be from Vietnam, right? I saw the name in here. Welcome, guys. Okay, I don't want to keep you guys waiting because today I just want to do some recap from part one. If you want, like, if you have any question, just ask me. Okay, let's just start our session for today. So again, guys, disclaimer first. Okay, this video is education in nature. Okay, so nothing should be construed as investment or trading advice. If you guys want to trade, please do your own due diligence before you guys trade. Okay, and today the agenda which is I'm going to cover, which is how to apply the ICT trading strategy, ICT action plan, and how you're going to look for or avoid liquidity pool and stop hunt and market structures. Okay. And about myself, my name is Peggy. I'm a trade analyst at Ever Frozen Globe, and you guys already know me. Some of you, I'm a prop trader as well. Okay, just a quick recap. We already know that ICT trading strategy is very one of the most popular strategy in the market. Maybe some of you guys might be interested, right? And we already know it created by Michael, so I don't want to go too much details about him. Okay, so I just want to recap like today how you look for liquidity, what is this replacement, market structure shape, which is actually is the short form is core. Let me, I think I forgot to here, just give me a sec. Sure, in MSS, okay, it's core, you can see here, and we do inducement, and we have fair value gap as well. If fair value gap, okay, then we have optimal trade entry. Okay, I will tell you guys how to look for all these in the trading view later. Okay, and then we have balance price range or imbalance. Actually, it's the same meaning. This video gonna be recorded. I think they're going to post on YouTube. Yep. but I don't know when that should be like next week. Okay, so basically let's go to liquidity or stop hunting. Actually the same. So basically we already know that there is a two type of liquidity: sell side liquidity or buy side liquidity. So basically what that's mean, usually this one, like you place the sell entry, right? You make sell order, and then this is you put like stop loss here, and then you gonna stop out, which either you call stop hunting, but over here in ICT they call buy side liquidity, and then price is reward in the same way. For example, you sell here, get stop out, and then what you see is reward here. And buy side liquidity, basically they clear all the stop stop out here for the sell side here, right? That's why I stop out over here. How it look like in the trading view? So basically it look like this. Okay, let me just remove which one should I use? It should be this one. Okay, I have the example, but okay, for example, I think the example very clear. Any one of you guys asking me don't know how to look for the buy side or sell side liquidity or stop out, stop hunting? The first part, I think they're going to upload on YouTube as well. Okay, everything will be recorded and then they're going to post it on the YouTube. You can just go and search it. Okay, so let me I just want to find example. Please just give me a minute. Any question for buy side and sell side? Okay, let me just explain, and after that I will tell you guys how to apply. Okay, and then what about stop hunt? Actually we already know how to look for stop hunting. So now we're going to talk about this placement over here. So basically what you can see here, actually when you put the stop loss, you know, over here, okay, and then you sell, you will get stop out, which is this replacement is referred to like, you know, really the big bullish candle, which it will, you know, swap or break this resistance. You get what I mean? This is called this replacement here. So basically in the trading view it look like that. If you see whatever, for example here gold, for example, talk about gold, you know that this is your resistance or key resistance level, right? This is the one like this level. Okay, here, and then what you can see here, you know that this is really big bullet candle, which is a big one. That's why it's go beyond your resistance level, I mean your key resistance. This one, this called this replacement. Okay, and then you can see that this could be buy side liquidity as well, or stop hunting. It's the same one. This is the one. Okay, and then basically like you sell, for example, you know that, okay, some of you will say that, okay, this is your like order block. For example, you sell here, for example, you sell here, right? You sell here, and then you just put your stop loss just above like this week, for example. Like this, you put your stop loss here, and then what you see here, you will get stop out because you just put slightly just above the wick, and then this is a really big bullish candle, is clear out or swap out all the stop loss or stop hunting, and then eventually it's, you know, go back to the side that like the sell side here. You get what I mean? Any question? Okay, this is the one. So basically just to make it clear, whatever your resistance, then you see like really big bullish candle, this called this replacement, and another one for like sell side liquidity, or for example this is the one as well, some like here, right? There's a reason to break through your support level, clear all stop out, and then up to eventually they just go up to the same size. Okay, and then now we're going to look for market structure chip. So basically it's very simple. If you trade SMC, okay, SMC, you when it's break your, okay, like this low, they will call like shock like chain of character, but ICT they call MSS, which is market structure chip. So basically you know that price is on uptrend, okay, like they make a low high, higher low, higher high, higher high, low, higher high, higher low, and higher high, and then after that they make a lower high, which is they break this this low, okay, they create a new lower, sorry, this should be lower low, and this should be lower high. Okay, okay, let me try to get the example. Like here, okay, okay, this should be lower low, right? And after that, from a higher high, they create the lower high here. Okay, but ICT, like I said, they call like MFFs, right? Market structure chip. For SMC, they call chain of character, which they are using this one. Okay, actually it's the same meaning. Okay, but ICT, MSS. Okay, and then they make a higher high, lower low, and lower high. Okay, this is how you look for market structure shape. And then after that, you know the price is change momentum from uptrend to downtrend. The condition that they need to break this low, okay, and then they create a lower low, not lower high. Okay, and now we're talking about inducement. What does that mean? I go back to the slide again, just a quick recap so we can practice more on the chart. Okay, so now talking about the inducement, is it okay? So one price is break the market structure chip here, they create a lower low, lower high, and then they create another lower low, lower high, like lower low, lower high here. Okay, this is between, this is the one like in the chart, I will show you guys later. It's called, I forgot what it's called, inducement, right? Where is my chart? Here, this is the one, like this one. Basically they need to create like two low, lower low and lower high. This should be lower high here. Okay, and then these are the break of structures, right? BOS, which is break of structures, and then they create another one is break of structures here. Okay, here this called and this called we have like inducement here. Okay, how it look like in the chart. Okay, let me try to find, for example, here this is a good example. It might be messy. Did I have any? Okay, let me just delete. Okay, okay, here, for example, here on H1, now we know that price is on uptrend, right? Because they create the like lower low high, lower low, sorry, low high, higher low, higher high, right? Like here, and then maybe here, and then this either you put this high, or either you put this or this one, and after that you can see that they break this. In this case, I think I'll just pick this one. Okay, they break this low, meaning that it's change momentum from uptrend to downtrend. okay, you change to like market structure chip, right? And now this one you mark at this is called break of structures, right? Because they make a low, lower high, lower low, lower high, lower low, right? Until here. Here is also called BOS, right? What does mean? BOS stand for break of structures, because this is a low, they break the low, so it means that they still make a lower low, lower high over here. And this is the one called inducement is here. Yeah, which this is the one, and this is the one. So a lot of wick here, like here, over here. Okay, like here. Okay, now we look for market structures, right? They already break, and like this, this the one. Okay, okay, like this one, like this one, this one. Okay, I use the like this one. Okay, now we go to this one, and then now you're going to get a fair value gap. So fair value gap is really quite forward. So basically, I still want to use this example, okay, for later how we get the entry. So basically, fair value gap is something they might have like 3 candle, either from resistance or support level, but I think I do have the let me see. I have the example. Okay, here, because I marked out already. So it saves time for you and for me. For example, where is my FPV? No. Anyway, maybe if I cannot find, me OTE. Anyway, okay, I think I just find the another example. So basically, there will be 3 candle. Okay, which is the second one to be like the big candle, right? This. So okay, so basically, this is 1 candle, second candle, and third candle here. So the fair value gap is this week and this week. This is your fair value gap. Okay, here. 1 candle, second candle will be like really, like you can say like really big candle here, and the third candle is small one, and then you can see that this week is not touched this week. So this is a fair value gap. And if you draw around here, you can see the price is almost come to like the zone, or so like the gap here, right? Then it's like price might fill out the fair value gap here. These are one of example. I do have the example for fair value gap. Any one of you guys doesn't know how to identify fair value gap, you can let me know. Where do I? Okay, like here, for example. Okay, I did already. Okay. Example here, that should be smaller time frame, like this one. Okay. Okay, like here. Okay, ignore this candle because this one fill out already. For example, here, you know that there is a fair value gap, which is like from. Let me just draw again. Okay, 1, 2, and 3. Okay, and you draw the fair value gap, which is this week to this week. Okay, and what you can see here, this candle, they came in and fill all the order, right? And then boom, it's bounced all the way from here from 2025, the price here, right here, 2025 to the highest one, which is 2045. So it's 200 pip. Okay, this is how you find the fair value gap. Any questions so far, guys? Okay, now go at my support level. Just ignore because I want to show here. So now we're going to get the optimal trade entry, which is called OTE. Okay, this the short form is OTE. Okay, how you get the OTE? So basically, we will use Fibonacci, which is 61.8 to 78.6 for your entry. Okay, this one we need to combine, or what you can see that from from price to downtrend. Okay, they make a lower, they make a low, lower low, lower high, lower low, lower high, lower low, lower high, and then at this point, excuse me, at this point they break the high, which is this high, so they make a new, or the side of the price is going to change trend from downtrend to uptrend. That's how you mark this as market structure chip, and after that you pull Fibo from your swing low to swing high, and then you will get like OTE here. Okay, how I get here, which is I mark at EURUSD and M15. Okay, let's go to that. Let me see if I still can find my entry. Okay, I think I cannot find here, but I just make this for example. Okay, for example here in H4, maybe I just do this as for example first. Okay, like here, you know the price is is on uptrend. Okay, in this one we will mark this first. Okay, as the market structure shape, let me just see if I can get the entry. Okay, for the ICT, you look for the higher time frame, but your entry that's gonna be either M15 or M30 or M5. Okay, well, because we want to find the entry from here, but what you can see over here, if you zoom in, you might get entry at this one, but you may not get the optimal entry sometime. You don't get it. Okay, let me find the example. It's the one. Which is the EUR. Just give me a while, guys. It may not be here. Give me one sec. Never mind. Okay. Okay, never mind. Let me just look for the entry. Okay. For example, I mark this at okay, structure shape. Then I go down to M15. Okay. Okay, let's see if you see on M15. Okay, this is a good example. Okay, because you know the price on this is on H4. We don't mark here. Okay, we look here for the M15. Okay. A lot of ICT trader, they use M15 or M30 for like scalping. Okay, like on M15 over here, you know the price on uptrend. Okay, and then they make a high, low, higher, like you know, higher low, higher high. And what you can see that this one, you can mark this one as market structure shape here. Okay, and now you see that is there any fair value gap over here or any place for you to entry? For example, price on here, right? You pull people from this is swing high to swing low here. Here, okay, the one here. So basically, if you mark this, let me try to shape here. If you were to wait here, I cannot find the example, but I think I do have a goal. This one is the where you is a OTE here, right? Optimal trade entry around this price here, and then you wait to sell here, for example. But you will miss the entry because of like this week and this week. For I myself, okay, I will mark this at my sell zone somewhere here. So basically, I will enter here at my one entry because what I move I pick here. Okay, this one I can consider at my fair value gap because this is the first candle. This is imbalance, right? Excuse me. And this is the you to mark here. This is like the third candle here. So there's remaining order somewhere around here. So you can consider this. Okay, this one at your fair value gap. Okay, you may enter one order over here, and then we might have to spare another lot if the price go up to like our OTE here. Okay, and the fill in already, and price is still make you can mark this as a break of structures. Okay, I still make this at break of structures here, BOS. Okay. And up to here, what you can see here, right? If you were to look at the market structures, you know that price is still on downtrend, okay? Because the high is lower. Even though this one, you can say that like you did a wick, right? And this is the wick. But some people, they might like mark this one at the resistance level, for example, or they mark at okay, price like make a lower low high, and this could be a lower low high here, and this is a high, low, and high. Some of them, if they were to look like that, you might get like tap out. Like if you were to read the market like that, you might think that okay, price is already break this high, and then you think that okay, from downtrend you're going to uptrend because of you mark this at market structure chip, right? Actually it's not, because the high you need to draw from the wick. The high is this one, right? So basically this one price haven't changed the momentum from downtrend to uptrend. So basically the low or the high still lower, they still make a lower high, right? That's why if you just put this at your resistance, you might get stop out here. Okay, and after that you can see over here you can mark this at either your resistance, and this is they make a equal high. Okay, you can say that is they make a equal high, and after that price go on downtrend, going downtrend here. Any questions so far? Excuse me. Any question, guys? This is one of the example. I do have goal for this which is I did just now. Do I? Okay, here. For example, for goal here. Okay, if you just look at H4 time frame over here, you know that okay, this is your buy side liquidity, or you get stop out because of this week, right? This week, okay, you get stop out here because you either you mark here at your high, but over here you know that okay, price come to this level a few times and then it got rejection. That's why you mark this one as your resistance. And if you came here, you sell, for example, you sell, okay, you sell, okay, here, and then you will get stop out, so you get buy side liquidity over here, okay. And now from over here you can zoom down. I took to H1, okay, you find the fair value gap over here. Where is my okay. Okay. I think I was at H1 for this, okay, like for this one, sorry, for this one, okay, what I marked over here, this is very kind of good market structure here. You get the like over here, which is, I'm not wrong, I even go down to like M15, okay, okay, here, okay, you want to look at M15, okay, because on the higher time frame you know that price really break the low, right? But if you want to zoom to like smaller time frame, you will see the market structure is very clear. Because of this one, you know that this is like, okay, in M15 what you can see, the high equal high, right? And after that price is got stop out, stop hunting over here, and after that is even like reverse down. Now how to get this order? You need to wait for the ICT. You need to wait for price to change the momentum from uptrend to downtrend. You know that we already got stop out here, okay? Because price is, you know, break above, I mean close above the resistance, okay? Actually, some people it might say, okay, you close above, then from here you're going to put like the buy entry. No, actually it's just like a, it can call fake breakout or stop hunting or buy sell liquidity. Actually it's the same meaning. Okay, you, what you can do now, you, once you see that, okay, rejection here, and then the 15 candle is big bearish candle over here, okay, you also can mark out this is your fair value gap, which is, this is your, okay, I maybe boom here, the week, and the week I use this week, okay, this week I identify at my fair value gap. And the more important thing for them to change momentum from uptrend to downtrend, you need to wait for price to break this low, so they make a market structure chip from here. And over here, remember that we do have OTE, optimal trade trade entry. You draw swing high to swing low here, okay. And this is the trade entry that you were waiting for, which is like here, right? Like from here. But if you to wait here and you don't know how to mark the fair value gap, you will miss the entry over here. Okay, what you can see here, when price come to the zone or to the box here to fill the order, and then you can see boom, it came out. Okay, and over here you also can see that this one we trade based on a higher time frame, okay, because in a higher time frame you know that H4 already make a the changing trend from uptrend to downtrend. Then you zoom in, just want to get the entry, which is M15. Usually I will use the M15. You will see the market structures in the M15. Then you need to wait for price to break the low, this low. Okay, after that you just wait for the optimal entry, which is 61.8 or 78.6, but sometimes I do add 50% as well, because I use many strategies just combined to one. So sometimes I use 50% as well. Okay, so if you use 50%, let's say you use 50, 61 or 78.6, because if you study Fibonacci, there is a premium or discount zone, right? We will sell at the premium zone, which is 50 and above to 78.6, which is the premium zone. We're going to sell. And then you're going to buy at discount zone, which is whatever below 50%. So in this case, I'm use discount and premium zone combined with ICT strategy. So in this case, what you can see here, fair value gap, you get 50% here, right? And then you can see the price tap here, and then all the way down here. You will get like how many pips? For example, you enter at here to the wick here, it fall down like 236 pip. Okay, you guys clear about this? Where should be the stop loss? Usually for ICT, stop loss is just above above the wick here. For which one? If you trade the ICT, right, you need to wait for price to break this, to like break this low. Okay, this low, and then after that you just place the entry just either like above 78.6% or just above like 100%, which is just above this one, which is, you see, if you put the stop loss here, for example, where is my stop loss? Okay, here, which is at 1936, right? And then your entry at 1927. So actually your SL is about like 90 pip. If you just want to be like not like too high, you can just put above 78.6%. Okay, if your lot size is very big, which is, if you're really confident, you just can zoom and then just put slightly like 50 pip above your entry. Okay. And then you can see that from here, you can see price is all the way down here. Okay. Any question, guys? So far, so good. So far, you guys understand? Any question you want to ask me? No question. Okay. Okay, now let me just go back to go again. This just I tell you guys, go is at my support level, right? It's go up to 20 pip already. Okay, excuse me. I will try to find the answer and then map out all the entry again. Okay. For example, I go to the higher time frame, which is head 4. Let me just look at head 4 over here. Okay, let me just try. For example, here. For example, here. Okay, in head 4, maybe I just say that, oh, price from uptrend. Okay, they make a from here, lower low, lower high, lower low, lower high. Okay, and then you mark this one because this week break already, right? And you just make this as like market structure chip over here. Okay, now let's go to M15. Okay, let's see what we can see over there. Okay, from the M15, what you can see over here. If you want to look at over here, M15, you might get the late entry already. But let's say we mark this from head 4. Okay, and you were to zoom, okay, you just ignore this one. Okay, I know that price create a swing high, and you either consider it swing low, either you move this, okay, 50% here, you will get the entry, which is this one, 50%, right? And like ICT, they based on the price action. Sometimes the confirmation that or the entry that you will get, right, sometimes it may not go to your OTE all the time, right? Because if like that, everything is going to be so nice for to trade ICT, right? In this scenario here, you know that this is one of the price action. If you cannot see, you can go to either M5. What you can see M5 over here, this is very nice price action, which is this one, right? You see this one, price action here, and it's just nice, it line up with our 50% fib level, right? Our 50%, even though OTE, okay, either OTE optimal trade entry, you want to mark like 78 to 78.6 or to 61.8, but to me, like I say, I just include 50% here, just include here. You can just put this at OTE if you want to, but if you just want to strict with 61.8, it's okay as well. Because I trade, I'm not based on only ICT, okay? I'm based on a lot of things. It depends, is either price action or Fibonacci, but in this case, we zoom in, we already see, okay, over here, that we have price action here, right? And I do have another confirmation, which I have a bearish divergence over here. Okay, that's why I have confidence to sell here. Okay, but ICT, I don't know whether they include, but to me, like, you know, since we already study Fibonacci, we study RSI to help you to identify the divergence. Why not we just, you know, just combine and look if there is any confirmation for you to put the trade entry, which is this one. We have 50% fib level, we have a price action here, and we do have Fibonacci, we do have bearish divergence over here, right? And you know that price is changing from uptrend to downtrend, so we're going to sell. We're going to sell based on higher time frame, which is H4. That's why you can just put the sell entry here. Okay, and over here, let's say you mark, even though from here in M5, you already might get the entry seen like you can see like these are break of structures, break of structures, break of structure here, and even here, and then eventually the break of structure, which is a higher time frame, which is H4, right? If you not zoom into M5, it doesn't matter. I just want to show you guys that you will see the price action in the lower time frame, which is your confirmation. Okay, and you see, if you know how to mark support and resistance, you know your resistance level in M15 right here. Okay, I'm not going to include, but we study all these and then we just use all of them, either ICT Fibonacci level or support and resistance. Any question? Pending order fib? No, usually ICT we don't do pending order. ICT is more to scalping, which is lower time frame. That's why a lot of, if you were to look at the YouTube, those like influencer or whatever, right? They will scalp in lower time frame, and they will do have like killing zone visit. I think they trade based on New York section or Europe market, because they have a volume, right? If you trade ICT based on maybe Asian market, you may not see the volume there. So that's why they will go scalping. So scalping, you need to be in front of computer, right? So I don't think you want to put the pending order here, because you need to wait for price to break the structure. They need to create at least like the low here, right? They need to make a market structure shift. After that, you mark already, okay, then you wait for price to come to the zone, either come to like 50% fib level or come to like OTE, like OTE here. Okay, these are optimal trade entry. Okay, and then after that you sell. If you want to look for like the PA, sometimes price may not go to OTE all the time. Like I say, you can get your confirmation lower time frame, which is divergent. If the divergent happen in resistance, of course bearish divergent or bullish divergent, or you can look for like price action in lower time frame, which just now I already show you guys in M5, right? This is how you place the entry. But again, they need, the most important thing, if you want to take ICT, they need to change. They need to make a market structure shift, which is changing from uptrend to downtrend. They need to break the previous low, which is this one. Okay, then you wait for price to pull back at the zone, and then you sell. Different. Okay, MFA is MSS, which is market structure shift, which is they're changing from uptrend to downtrend, and break of structures of BOS actually is just down theory. You guys know about down theory, right? Okay, this is now let me clarify for you. Now, okay, let's just say you like it. Okay, it's like this, right? You know that price is on uptrend. It should be high. Okay, this is should be your low, for example, low, high, and then they create the higher low, right? Here, you need to mark, you need to know how to read market structure, and then they make a higher high. Okay, and then they make another higher low, and then they make another higher high here, and then this is your low, right? The previous low. It's on uptrend. Price supposed to come up here. Okay, make another higher low, higher high, right? It's supposed to be like that. But because of this one, the chain of market structure shift, which is MSS. Okay, they change already. And now break of structure, which is they break the low here. They will mark this one as your break of structures. Okay, this one and this one. Okay, and you need to mark like this and like this. Okay, break of structure meaning that the price here, they break this high, they make a higher high, they break this high, they make a higher high. Okay, now since there is a MSS already, market structure shift here, so price is changing from uptrend to downtrend. They break the low, this price break the low, create another low like that. Okay, now, but of course in the chart it not look so nice, right? But if you know how to identify the market structures, you need to practice, and then you train your eye, it's easy for you to look. Okay, now if price want to change to uptrend, you got to make like that. Okay, like that, right? Why? They break this high. This is your MSS. Okay, and then break this high. This is your break of structures, and then this is your break of structures. They create a low, high, low, high, higher low, higher high, higher low, higher high, higher low. This one should be high, lower high, lower low, lower low, lower high, lower low. Yeah. If that's clear, guys. Now let me just look at the market. Okay, for example here. right now, not right now, head 4. Okay, now let's just look at gold, right? For example, gold in head 4, you know that price is, to me, either head 4 you cannot see. What about you zoom to H1? Okay, in H1, you know that, okay, you may consider either, I zoom for you, price is on uptrend, right? You can uptrend, make a lower, is higher high, higher low, higher high, higher low, which is this high. If you were to map out fair value gap, this is a fair value gap. Even you want to go until here, okay, let's just say you map this one, 3 candle, right? I zoom. This one is your fair value gap. This, okay, here. Ignore this candle first, right? Imbalance, really big bearish candle. Okay, this is your the wick. First candle, second candle, third candle is the wick here. So this is, there's remaining order here. Okay, price is come, tap to the FVG, our fair value gap here, and then falling. Okay, if you were to look very closely, okay, you might think that, okay, I think price already break this low. You may mark like that in a higher time frame, which is here, right? And you know that this is your swing high, your swing low. Either you, this on your fair value gap, if price come in, definitely you're going to sell, right? Let's say if you pull Fibo from your swing high to swing low here, which is this low, okay, this one. I just want to move here for you to see. This is ending point, starting point 100%, ending point 0. What you can see here, price come to hit your 50%, okay, and then boom, go down in head 4. And what you can see here, either you mark this one, they create this one, and this one, okay, either you get this order with fair value gap, price still on downtrend, they create another low. So my another swing low is here, this one, okay. I just want to pull for you to see, this is my swing low, okay, and swing high, okay. And what you can see, the price come almost hits 61.8, but they go a little bit above 50%, and then you get another entry here for gold. Right, and you can see that here, either you mark at BOS, this is in head 4, you can go to low H1, sorry, so this is a BOS as well, right, like here, and go up here. Here you can consider, let's say if you look like that, you will get, this is your I let me remove this one. This one we already get order, okay. Now this one is stop hunting or buy side liquidity. Let's say here, okay, let me just put here, let's see, just like that, okay, got stop off already. And after the price came up, another liquidity zone should be this one, okay, this week, right? Let's go to M15, okay. Now M15, what you can see over here, ignore this one, okay. What about this one? We get stop out because we thought, okay, price break is going to go up. Let's see. Okay, I stop here. Now they make a high, this is a high, and then they break this low. They just mark this like that, okay. I don't know what's going to happen because I did not prepare it, but let's just see in M15. Okay, we can stop out here, but I might get the entry because I saw barely divergent over here. Okay, I'm not sure only with ICT I will get the entry here. Okay, like here, let's say I get stop out here. For example, I get stop out, I will get another entry over here because I know that there is a bearish divergence here, and this is the zone. I will mark this one, but price may not come to the thing just to go to the like the box here, but I may get the entry here. Okay, now let's see what's going to happen. Now they break. They break. They just wait. They create and now no, they not come to the. Okay, let's just think they break these structures. We think that okay, they might create this high. Okay, from like this. Okay, if you see just now, I think this is a low, right? This is a high. You might get this entry at 60 or 50%. It might go a little bit too far. Let me just check. And then boom. Now, if you want to draw Fibo, they already like here your low. Okay. I'll just make it faster. Now, I don't think they will come up, but we will get this entry. Okay, like here, just like I said, at 50%, which is somewhere where I forgot. This one. Okay, like this is a week, right? We draw from Fibonacci. From here to here, you will get another entry, which is at this candle here. And then from here, 2070 to like here to here, you get another 147 pip. I cannot share the PowerPoint, but you can just watch the session at the YouTube on YouTube. I think they're going to upload there. Okay. Any question, guys? Okay, I'm going to launch the poll. Okay, you just help me vote whether you like this webinar or not. So just can you see? Okay. Break of structure happen after the previous low break with a full body candle or its break. Wick. Usually I will use the wick to identify either like break of structures or market structure shift. You need to use the wick. Okay, quickly watch guys, and then you can see my screen. If you not guys watch, and if you guys not watching for me, and you cannot see the screen. Okay, it's okay. Just close the any question before I end the webinars? Okay. Any questions, guys? Last question. Okay, if there is no, okay, no question. Okay, you're welcome. All right, guys, if there is no question, I will see you guys again next webinar. I'm not sure. Okay, but they're gonna be rotate with me and my team. Okay, you will see us. I think next next section that's gonna be live trading section, right? Next, which is next Monday, and then Tuesday is gonna be education. Yeah, I will take care of myself. Thank you. All right, guys. Take care. Okay, and see you guys again in the next session. You're welcome, Desiree. Nice to see you. Okay, goodbye, guys. Take care.